Hey everyone, Jon Sharp, President of the Hardenbergh Insurance Group, coming to you again today from the HIG Academy and talking about life insurance. It's the end of the year, so it's a good time to start thinking about your life insurance. If you have coverage today, I encourage you to look at the beneficiaries that you have in place. Throughout the year, life changes occur. You may have had a child, which would be great. You want to add that child onto your policy. You may have had a different life change where you want to take someone off as a beneficiary. So I encourage you to take this time to take a look at who your beneficiaries are and make changes that are necessary. And I'm not talking just about individual coverage. If you have group coverage through your employer, it's also a good time to take a look at that. The beneficiaries can be changed just like you can on the individual life. So that's the first thing I want to talk to you about. If you don't have life insurance, now might be a good time to reconsider. Again, your life may have changed. Maybe you have a child. Maybe you got married. Maybe you have a need now that you didn't before. Maybe you bought a house and you want to have coverage for income protection if something were to happen to you. The last thing you ever want to do if something happens to you is leave a financial burden behind. So if you don't have life insurance now, or you don't have enough life insurance, now's a great time at the end of the year to take a look. There are three types of individual life insurance that I want to summarize for you, and hopefully will help you make a decision if you're going to buy life insurance. The first is term insurance. Term insurance is really simple. It's kind of like leasing a car. You buy the term insurance, let's say it's a 10-year term. You pay the premium every year for 10 years. If you pass away during that period, you get a big check. If you don't, at the end of the 10 years, the term policy is over, just like when you're done leasing a car, and you turn it back in. Now, there is a caveat to that. Every policy needs to stay in force so they can convert over to a whole life policy, but the cost becomes astronomical because every year it resets. So term insurance, you want to think of it like leasing a car. Buy the coverage, keep it in place till the termination date of it, and then turn it back in. The second type of coverage is whole life insurance. Whole life insurance has two functions. The first function is life insurance for you. The second function is it has a cash value portion. So as you're paying the premium in your whole life insurance, you see a cash value accumulate year after year. So this is a great investment tool that you'll hear about where you pay quite a bit more money in premium than you would on a term policy, but you have this cash that you can take out at any point if you choose to do so. So whole life is a lot more expensive, but has a cash value tied to it. The third policy is a universal insurance policy. This one's kind of a hybrid between the two. It's a hybrid because it's less expensive than a whole life policy, but more expensive than a term policy. The term limits of the policy are similar to whole life, where it won't end if it has cash value in it. There is cash value that builds up over time, but that cash value, typically halfway through the policy lifespan, starts to erode and is used to pay off the premium. That's why you have a lower premium. So you'll see it's like a wave. You'll start to see cash value increase with universal life, and then as you start to get older, it starts to decrease, and it offsets the cost of what the rising costs would have been in that whole life policy. So at the end of the day, you have a policy for a long period of time that's not going to terminate like a term life policy, but it's not going to have cash value like a whole life policy. That's why it's a hybrid. Those are the three life insurance policies that are most common in the marketplace for individual coverage. If you're not having a conversation with your risk manager now about the need for life insurance or the need to re-examine the amount that you have in place right now, give us a call. We'd love to have that conversation with you. Thanks again, and I'm Jon Sharp, President of Hardenbergh Insurance Group, coming to you from the HIG Academy, again, talking about individual life insurance.